Welcome, everyone, to Boston University School of Hospitality's annual Summer Conversation Series. I am Arun Upneja, proud Dean of BU Hospitality, home of innovative undergraduate and graduate programs. Today, I want to briefly talk about our MMH program, Master of Management in Hospitality. It is designed as much for new entrants as for those with years, even decades of experience, who want to recharge and garner inspiration from others. With optional concentrations in innovation and entrepreneurship, real estate finance and feasibility, revenue management and analytics, digital marketing, restaurant management and experiences, and now senior living and lifestyles. In light of these concentrations we offer, this summer we are presenting to our students, faculty, and industry friends a series of panel conversations to talk about these subjects. We begin today by bringing together incredible experts and friends of BU Shaw to talk about the current state of the lodging real estate landscape. Moderating today's conversation is BU Shaw Professor Kaushik Vardharajan, newly appointed head of our real estate program. I'll turn it over to Professor V to introduce our guest and start the conversation.
Thank you, Dean Upneja. Good morning, everyone. Thank you for taking the time to join us today. It's an absolutely gorgeous day here in Boston, and I hope it's the same wherever you are calling in from. I have the pleasure of introducing an amazing panel and to hosting what will certainly be an exciting conversation today. So let me get going with the introductions first. Most of you know the panel already, but I'm going to keep my introductions brief. We'll do this alphabetically. Andrea Foster, our first panelist, is Senior Vice President Development for Marcus Hotels and Resorts, where she's responsible for marketing the company's hotel management expertise and identifying and securing acquisition, joint ventures, and third-party management opportunities. She started her career in hotel operations and has worked at PKF Consulting, now CBRE Hotels, and Miraval Resorts before joining Marcus in late 2015. She's a member of the Lodging Industry Investment Council and the 2020-2021 chair of AHLA's Forward Women Advancing Hospitality Initiative. Thank you for joining us, Andrea. Next up is Chad Sorenson. Chad is Managing Director and Chief Operating Officer with CHMWarnick, which provides hotel asset management and ownership advisory services. He serves on the board of directors for HAMA, the Hospitality Asset Managers Association, and is chair emeritus of the International Society of Hospitality Consultants. Welcome, Chad. Next up, we have Davonne Reaves. Davonne is founder and chief hospitality strategist at Atlanta-based hospitality firm, the Vonne Group, where she helps first-time hotel owners acquire and open their hotels and be successful in their entrepreneurial journey. Davonne and her business partner Jessica Myers, also founded Epic Collective in 2019, a millennial-driven hotel ownership group that acquired the Home to Suites by Hilton in El Reno, Oklahoma in November 2020. Davonne has 14 years of experience in the industry and has held positions at event management firm, Blair Management Consultant Services, Horvath HTL, and CHMWarnick. Welcome, Davonne. Next up is Julienne Smith. Julienne is Senior Vice President Development for Luxury and Upscale and Transactions and Asset Management for IHG Hotels and Resorts, where she oversees the company's growth in North America. Prior to IHG, she spent 14 years at Hyatt, most recently as Senior Vice President for Development and Owner Relationships for the Hyatt Place and Hyatt House brands in the United States and Canada. Julienne held several positions within Marriott International's Lodging Development Group in Bethesda and Newport Beach, California, prior to joining the Hyatt. As of 2020, Julienne serves on the board of trustees of the AHLA Foundation. Welcome, Julienne. And last but not the least, Sebastian Colella. Sebastian is vice president with the Pinnacle Advisory Group based in the Boston office. He has over 20 years of experience in the industry, having held a variety of management roles in hotels, resorts, and private clubs at companies like Club Corp, the world leader in private clubs, Rosewood Hotels, flagship property in New York City, the Carlyle, and has led efforts to open the first luxury resort in Zanzibar. Welcome, Sebastian. So, I think, needless to say, the last 12 months or the last 15 months have had a serious impact on the hospitality industry. And our goal in this panel today is, instead of focusing on what has happened in the past, our goal is to look forward. discuss what we've learned from the last 12 months and how those learnings will impact how we do business in the hospitality industry going forward. So I'll kick this off by asking the first question to Sebastian. Sebastian, Pinnacle does work across the country. So can you give us an overview of where we are in the markets today? What's going well? What's not going well? Where are we on the path to recovery? Thank you.
Sure. Well, first off, Kaushik, thank you for having me as part of the panel. And a big thank you to BU and Shah for putting the summer series together, as well as a lot of the content that you guys have been putting out there virtually through the pandemic has been really informative, and it's been great to follow along. So thank you for putting these types of things together. As for the recovery, I think the best way to describe it right now as looking at data through April of this year is really just, been incredibly uneven. We have some markets that have already achieved pre-pandemic occupancy levels, some that are at a premium to 2019 ADR levels. And then on the other hand, you have certain markets that are down 30 points in occupancy and in conjunction with 30% down in rate. So it's this big spread that we're seeing, and it's really inconsistent. And I think it's really driven by the different demand segments. So we've all at this point heard of pent-up leisure demand. We saw it last summer and last fall. And looking back on it, that was really after somewhat of a short lockdown or quarantine. And so some markets have already seen that leisure demand in 2021 starting as early as January, whereas others up here in the Northeast, we're just starting to see it now. And so the one missing piece, of course, is corporate and group related travel. And of course, without that, as well as international. So any market that really relies heavily on corporate and group is sort of at the back of the pack when it comes to the recovery. And, I think you mentioned, to hit on specific markets. I think there are certain markets where in Q1 and Q2, they are very leisure oriented. Those tend to be the warmer destinations. And then this year, those are also the states that opened up their government restrictions much earlier than others. And so through April, those markets that are really the front of the pack in the recovery are the Tampa, Miami, Phoenix, Atlanta. So all those major markets down in the South. And then on the flip side, you have what was once the markets that were in the top 5 of the country historically are now at the bottom 5. You have New York, San Francisco, Boston, DC, all with RevPARs down over 60% to where they were in 2019. So there really is this big gap. I think the good news on that front is on the leisure demand piece is that we're right around the corner from summer. Those markets like Boston and New York, if they haven't already, they will be very soon seeing that leisure demand and sort of closing that gap on those other markets that have already started their recovery. I think the big question now is really the corporate and the group, and when does that come back? When people start to return to offices, what does that look like? Is it accelerated right after Labor Day? Is it slowly and then accelerated through 2022? So I think those are the questions that we're going to be looking at moving forward. But most markets are expecting a very robust summer filled with leisure, which is really driving the recovery at this point. So I think another good point is, and you also mentioned this in your question, is the recovery is different by property type as well. So we're looking at those that have been impacted the worst are those upper upscale hotels throughout the country. So those are your full service hotels, lots of meeting space, food and beverage outlets, typically located in downtown markets. So those are struggling the most. Whereas the economy scale hotels, the lower priced, hotels that are typically located in regional destinations, drive-to locations along the highway, and of course they're really targeted to price-sensitive travelers. Those are actually weathering the storm a little bit better. So I think in summary, I think the recovery is really inconsistent throughout the country, but there's no doubt that it's really underway at this point. Some are just further along than others. And Kaushik, I know you had asked me to try to give a sports analogy on this, and I did my best to research cricket for your sake, but the rules are just way too confusing. You're gonna have to give me a rundown on that at some point.
Yeah, you teach me baseball, I'll teach you cricket.
There you go.
So Chad, CHMWarnick asset manages properties across the country. Can you give us a perspective on what you're seeing on ground?
Yeah, so I think Sebastian hit most of the main points. Really, the big question out there is, when will that corporate group come back? When does that business traveler, come back, and at what level? How long will it take for the individual business traveler to get back to where it was pre-pandemic, given all the new technology that's come into play over the pandemic? And international, I have confidence that once the borders are opened, it will come back with a fury. But when that is, really don't know. When you look at the TSA throughput numbers, the domestic traveler is clearly on the road to recovery, but international has not started again. And so again, in addition to just the people hitting the road and using hotels, the consumer behavior change is a big question as well. Is the group customer going to spend like they used to, or the corporate traveler is going to spend the way they used to? How long is it going to take to get them comfortable with a longer stay? So it's, there's a lot of moving parts still. There's a lot of unknowns out there, but especially we are clearly starting to see the recovery, and in the markets that were been dormant the most, the big urban markets, the large hotels. In April, we really started to finally see meaningful activity at the hotels, but it's all relative, right? Meaningful activity means 20, 25, maybe 30% occupancy. So I'm really hoping, leisure travelers are going to go back to the urban cores and start using the restaurants and bringing these downtown areas back to life. That has direct and indirect consequences on all markets. So we're on the road. We just got a ways to go to get there, I think.
And either Andrea or Julienne, either one of you can take it. Of course, we're seeing increase in demand, and I think that's a positive sign throughout. But I'm wondering, is that also being accompanied by more hotels reopening back up, therefore leading to an increase in supply also in markets? Does one risk offsetting the other? What are you seeing in your portfolios?
Sure, I'll jump in. At IHG, we only have about 2% of our inventory still closed, and that's way down from where we were in the height of the pandemic. So we are seeing more hotels open. We have a reopening plan for our hotels in Midtown Manhattan, which have been hit the most by this pandemic. So that's certainly helping, get people into our hotels. But as Chad and Sebastian both mentioned, it really is about group and corporate. And last week, I had the opportunity to attend the Hunter Hotel Investment Conference in Atlanta. And 1,200 people were there in person. 1,800 were there in 2019. So, it's down, but it's certainly not as low as we had thought it would be. A month before the conference, there were only 300 or 400 people registered. So the last day registrations really helped increase the numbers. And part of that was Hunter partnered with Clear to ask COVID-related questions, take temperatures, and the staff at the Marriott Marquis, the host hotel, reminded people to keep their masks on, and so forth. So it gave people a level of confidence that we can meet. And the other thing that happened is hotel owners found out that the brands were going to be there. Brands found out that the hotel owners were going to be there. Brands found out their competitors were going to be there. So it just kind of built momentum, and attendance increased. And Davonne was there as well, which is great to see her. And it helped kind of re-energize kind of downtown Atlanta. But we were the only conference. So typically we would be up against the dental conference or some other conference that would be in town at the same time, and downtown would be alive and all the hotels would be filled. The Marquis saw some great business, but it still wasn't quite there, but it did feel like the beginning of something. And many of us have corporate business on the books towards the end of the year. Now, we've had corporate business on the books in previous times throughout the year that continue to get pushed. But now with Goldman Sachs saying our employees need to be back in June, you're coming back to work, and other corporations doing the same, we do think that will come. Now, as it relates to, you said something about supply. As it relates to supply, there is going to have to be a reopening plan for those hotels that have been closed in the most impacted markets, for sure. the development pipelines have slowed a little bit relative to the capital markets being available. And I know we'll talk about that a little bit more later on in the panel, but it'll happen slowly. At the conference, STR recommended or predicted that we would see a full recovery in 2024. But as I talked to a number of different owners and their commentary about what they're seeing and what's on their books, they are more hopeful about 2022, which I certainly am too. We tend to be optimistic in the development side of the hotel business. So I do feel like we are on the beginning of recovery.
Right. And Julienne, I'm so glad you hit on Hunter. I wanted you to share that experience first, but so, just about all of our hotels in our portfolio are open. And what we're finding, we're seeing the same. Leisure business is certainly coming back, just as everyone has shared so far. And that gives us hope because individual travelers are comfortable traveling. And that's what that tells us. On the corporate side, it's the same question. When are we going to have business travelers, coming back? When we can do this, when we can Zoom and, have meetings in that way that are effective. I don't want to say they're as effective always, but that are effective, then that may continue for certain types of meetings. To Julienne's point, when competitors begin to travel, when your competitors begin to travel, you'll travel. And we had that, over the course of the pandemic, where there are things we really needed to show up for in person, and we were all comfortable with that, made sure that everyone was before we did so. But that'll be important to see when it comes to group. I know sales, people in our properties are really being inundated now with calls. So there's a lot of backup. Social demand, social group demand is significant. People who put off their weddings or went and did a justice of the peace, and now they want to have a bigger celebration. Now that restrictions have eased, we're seeing a lot of demand for that and starting to see corporate come back on as well. So the sense is maybe group may come back a bit before the individual corporate traveler comes back with so much strength, because as we're doing this and getting kind of day-to-day business done, we still need to gather, to Julienne's point of, Julienne and I talked about Hunter, and, I loved how she said, I wasn't able to attend, but she said, it was like, I love you, man. I've missed you, man. I mean, it was like, and woman, but there was a lot of that going on. And that's what we've missed, when we're, just Zooming and connecting virtually. And that's something that we're able to provide in our industry. And I think there's certainly demand, for that we're already seeing start to return.
If I could build on Andrea's comment about the conference being kind of a love fest, the kickoff speaker was an economist who talked about the Zoom technology really helping move sort of relationships along, but forging new relationships and beginning new relationships is really difficult virtually. So the fact that we've been able to carry along business is probably because we've established all those relationships. We've met with in person. We've attended conferences together. So this is just sort of a holding pattern that we're in. But any new relationships or anything that we want to grow, we do have to do it in person. And I know that we all crave to be together in person, irrespective of the industry, not just in the hotel business. We're community-driven people. So I definitely think Zoom will stay because you can get some accomplished, but it's not a replacement by any means.
Yeah. Like they say, there's no substitute to a handshake. And it's funny that considering how many conferences all of us attend, and sometimes too many, for us to be in a space where we're using fear of missing out and hotel conferences in the same sentence, I think that's a good sign. I think all of us can't wait to get back to more of these events. And it's great to see the hotel industry put its money where its mouth is and host one of these, which is great. So I think just heading on into the operational side of the business, now that I think we have a better understanding of where demand and supply is. On the operational side of this is, of course, over the last 12 to 15 months, I think from an operating perspective, there were a lot of changes that were made at the hotel level in terms of how we operated, whether it was restricting the number of times you had housekeeping in a week or F&B operations. Maybe Chad, I can pass this on to you. You can kick this off. Of all the various things that you did to adapt to the pandemic, which are the ones that you found to be most meaningful in your hotels? And what do you think that those practices will continue, or are they short term? Can you give us some insights?
Yeah, so I think the mantra of asset managers through the pandemic, as operating models had to change dramatically, was this is the new norm, right? we figured out how to operate hotels with a much leaner team, more efficient operations, little to no tolerance for food and beverage outlets that don't turn a profit. And we continue to say that day after day to get some muscle memory with our operating partners from an ownership's perspective, and making sure that we don't see demand recovery and all of a sudden the operating platform goes back to the way it was in 2018 or 2019. So that's really been the conversation. But what does that really mean, and how does that translate? So what do we do differently? And is the consumer on board with changes that we're going to make to bring more to the bottom line? Are they going to be okay with a limited menu? Are they okay with venues not being open as much through this recovery period? And I think there's been a couple lessons learned with consumers that the whole industry was wrong on, right? I mean, think back a year ago, we said, wow, we don't think guests will ever want a housekeeper back in their room. So we look at it from an owner's perspective, like, that's great, right? What's our largest labor cost? It's housekeeping. Well, that took till about June or July, and people started traveling a little bit. And I think we quickly saw that, people go to a hotel and they want their room serviced, and they're willing to have people come in. Of course, they want the cleanliness. Now they want the vaccine, but they're not. The consumer isn't willing to make that sacrifice. And so it's finding this balance between what lessons have we learned because we were forced to when the world fell apart a year ago, and which ones are truly going to be sustainable because of customer needs. And then came the big curveball that I don't think anybody saw coming is, we don't have anybody to service our guests and clean our hotel. Who would have thought that 14, 15 months after this pandemic started, and we're knowing how far down we were, starting to recover, and our biggest issue was finding people to service the guests and work in the hotels. And so, I think we're going to have to continue to adapt and adjust. And I don't think there's any 1, 2, 3, 4 big nuggets here. It's going to be a lot of small things, but a big part of it, unfortunately, is going to be centered around consumer behavior and what they're comfortable with. I mean, we've seen over the we are in a cyclical industry, and after the Great Recession, after 9/11, I think we learned consumers have a very short memory and are very quickly to go back to what their expectations are. So it's going to be complicated, and this labor issue makes it a whole lot more complicated, because I don't think that's an easy fix. We've just lost so many employees to other industries.
So Davonne, I'm going to come to you next. During the pandemic, some of us gained weight, some of us lost weight, some of us had some interesting adventures. You jumped into the industry and bought a hotel and entered the market as an owner. So, you like to live dangerously. So now that you're a hotel owner in the midst of a pandemic, what are the challenges you're facing? This labor issue seems to be a big problem for hotels across all classes. Can you share some of the challenges you're seeing now?
Yeah. So what I've been seeing, I don't know how many of people are on Facebook, and it's this Facebook group called Hospitality Family. And so I joined this Facebook group, and it was just a lot of people. It was mostly like a venting session. I guess to some it was therapeutic. But what I got to see, because I've been so far removed from actually working inside a hotel, and they were sharing their stories, how they were disappointed, how they were with so many companies for years, 20, 30 years, pretty much giving their lives to these companies. And they were disappointed as how they were treated, when they were laid off, let go, they general managers, director in sales and marketing, they were let go via email, no phone call, so they didn't feel appreciated. Right. And so now we're having this conversation about labor shortage. And I'm hearing a lot of people saying, oh, well, it's because, a lot of people are making more money with unemployment than going back to work, which is an issue. So we'll probably have to look at increasing rates to getting people back into work, because if they're making more on unemployment and now you're asking them to come back to work to clean rooms, checking guests, dealing with people, doing it day to day, and they can be at home. So that's another issue that we're going to have to figure out. But I'm noticing that a lot of people, and I'm just seeing their stories, they don't want to come back to the hospitality industry because how they were treated. So now we lost a lot of talented people to senior living, to, where they feel appreciated. They're not working as many hours and they don't ever want to come back. So we're losing this good talent, and people, I'm sure our industry didn't expect this fast turnaround. I'm not surprised. Because my generation and younger generations, they were traveling a lot during the pandemic. So it wasn't a surprise to me that we're moving this fast. And we did acquire a hotel during the pandemic, and we made sure that we took care of our employees. So we brought in a new management company. The hotel that we had in prior, or the hotel owner prior, he didn't have a management company. And so we came in, and the first thing we did, we focused on the employees. And once we really focused on the employees, we didn't have to lay anybody off. We kept them. We actually gave them, they had benefits. Because I couldn't believe they didn't have benefits. And we just made sure that they were taken care of first. And once we took care of those employees, because I got my start working as a front desk agent, so I remember what it was like. And so once we took care of those employees all the way up, like from the housekeepers all the way up to the general manager, that's when we noticed a strong shift in our hotel. And now before when we came in, we were definitely probably about 20 to 30% occupancy, and now we're closer to the 70% now. We're on track as far as being more of a market leader when it comes to rate. So the biggest thing is just really just taking care of your employees so that way they can take care of your hotel.
And Davonne, I'll chime in there just quickly on that one. I think that's a really important point. I mean, I think the instinct is to just raise rates for new hires. You'll attract more talent if you pay more. But what we're seeing is exactly what Davonne is saying. You've got the employees that have stuck with you through the pandemic. They've been working their tails off. They're the ones who need to be compensated more. So we're having more success with taking care of our employees, paying them more, encouraging them to bring people to the table that are looking for jobs, paying them retention bonuses when the new employee sticks around, tying them to training of new employees and paying them additional to doing that. So it's this whole culture of wanting to be there. And I don't think the dollars and cents are going to be the driver. It really is, as Davonne said, is where individuals can, feel like they're part of a team and they're proud to go in. And of course, they're there to make money. But that culture and being part of that team, I think, is really important. But it does start with your core team of who you have. And I think many people overlook that. And they're too focused on, filling open positions and paying unproven people to come in. And that just has all sorts of unintended consequences if you're not thinking about that right.
And I'll add to what Chad said. I mean, it's exactly that. It's certainly we need to and we do make sure that we are competitively compensating employees, but it's really taking care of everybody. We have such a strong culture at Marcus, and it's a culture of people first. It's people pleasing people, and so really taking care of everybody. And we've found that as we brought back employees, the people who've been with us for a long time, they're still with us. We're retaining this core group, which is absolutely fantastic. And it's part of it, as you said, is compensation, but it's the intrinsic value of culture, of respect, and providing flexibility where possible. We've learned a lot about individual needs during this time period, and so just understanding what individuals need and how we can ensure that they have a healthy balance with home life and family, and ensuring that we can support that in any way we can is an important step. So that's where we're finding a lot of success in being able to bring back and retain our team.
I do want to add, as far as not only taking care of your employees with benefits and compensation, but mentally as well. Like what we've just gone through was extremely traumatic, right? Nobody's ever experienced this, in our lifetime. And, so you're going through a pandemic, you're still working, you have your family, you may have lost someone, unfortunately, or you may have caught it. And so it's just, what are we doing not only as a culture, but as an industry, how are we taking care of our employees and ourselves mentally? So that way now we have to deal with a lot of disgruntled guests who before they had room service, before the pandemic, and they coming back and they wanted that same type of, treatment and experience, and we're unable to provide that. Or some hotels are unable to provide it. So what are we doing, from that standpoint, to make sure, again, going back to those employees and us to make sure that we're taking care of, each other mentally.
Yeah.
I've heard it said a few, I was just gonna say, I've heard it said a few times, we're all in the same storm, but we're each in different boats. And I think that's the best way I've thought about it, looking at this, is that, everybody is handling the storm, from a different perspective, from a different place, and understanding that is critical.
Yeah. So, there was a very interesting survey that HAMA released towards the end of April, I think, or beginning of this month, where they spoke to owners, and the top 3 concerns of ownership groups in the US that they spoke to, number 1, surprisingly, was not return of demand. Number 1 was availability of labor. Number 2 was return of demand, and number 3 was labor cost. Because I think, like Todd said, Todd Coleman mentioned in the chat, I think, sure, the culture is important, but I think there's definitely going to be a financial impact, and you're going to have to provide financial incentives to bring people back, especially with $15 kind of starting to become the minimum wage across states and across companies starting to do that. And like Davonne, like you said, competing with industries outside of hospitality. So I think that's going to be a big challenge going forward. And I think a lot of students who are now graduating are, facing the same. They have these multiple options now. So something I'm sure definitely that we're going to continue tracking. I'm going to move on from here, and I think not only have we had to deal with the disruption of the pandemic, we have the other traditional disruptors who have continued to disrupt our business in other ways. So Julienne, I'm going to start with you. So companies like Airbnb, Sonder, companies like Kayak saying they're going to brand their own hotel in Miami Beach. There's so many other things happening outside of what we typically focus on. What are you seeing in that part of the world? Are you tracking that?
What's funny is I saw on social media somebody post, they said, with all the fees that Airbnb and Uber are charging, I'm going back to hotels and taxi cabs this summer. So I said, yes, more of that. Keep layering on your fees, home share programs and ride share programs. Yes, there's certainly a disruptor, right? I mean, I've personally traveled with VRBO because I'd be traveling with my extended family and we want a house and multiple bathrooms and a real big kitchen and things like that. But that type of business actually doesn't take away from hotels. The small accommodations in urban city centers certainly is a competitor for hotels because it's a rooms business versus, an experience, on the coast in a home, for example. So we are seeing that, but I continue to believe, I've always been on the brand side, but I continue to believe in the strength of brands because of today, the clean promise, right? What all of our brands have done, IHC and everybody else in partnering with places like Cleveland Clinic or Ecolab to make sure that we have the best in class cleaning processes, even above and beyond pre-pandemic, which, hotel rooms have always been, or, the last 20 years at least, very clean, right? We all remember that HBO Blacklight episode from 20 years ago, or most of us do. And those days are gone, right? The rooms are clean. They're even more hygienic at this point. So you have that. You have the safety, right? The safety as a traveler, as a businesswoman traveling, I'd rather be at a hotel because I know if I pick up the phone and call the front desk, somebody's going to answer. I know there's people around me. If something were going on, I could get help versus being in somebody's home. I don't know what would be happening. I think where we need to really step up as an industry, though, is our digital connectivity, right? I mean, the ability to connect on Uber, let's say, and book a car. I mean, it's seamless, right? And I think all of us in the hotel business have tried our best to kind of get that digital connectivity right, but we're still not quite there in making our platforms a place to go for more than just hotel stays, right? In some of the travel apps, I mean, you can do multiple things with multiple partners in order to kind of complete your entire travel journey. So I think we have an opportunity to grow in that way. But I believe in hotels. I think that the brands, for the most part, my competitors included, have created something that take care of guests in a way that home share just can't do it. So yeah, Andrea, I'm sure you have something to add to that, because I know you've had your eye on some of our competitors as well.
So I will certainly add, I mean, we talked about labor, and you touched upon the technology piece. I mean, I really think that's very much where the home sharing has leapt ahead of us, is exactly as you said, the connectivity and being able to provide that. And I think that's, an example that we can follow. And during the pandemic, people have gotten comfortable using mobile keys and things and not stopping by the front desk. And so I think there's an opportunity for us to move forward in the technology world that I think our industry was a bit resistant to doing, saying, no, it's all about hospitality. It always has to be a person in front of you who's providing that. But there are people who want to travel and they just need to get where they're going, and they just need to get in their room, and they don't want to wait in line to check in. So I think that's an opportunity that we can keep moving forward. And that may be helpful in, there may be maybe one fewer position that we need to fill, on a regular basis, if we have technology to be able to, to take care of that. And, with the challenge in finding labor right now, that, that could certainly be the balance. But on the hotel side, certainly there is the reliability of there's someone there for you. There is someone at the other end of the line, and we have the whether it's the brands or the independent hotels that have their own experience, their own experiences and their own standards that they provide to be able to, give the guests that comfort that they're, that they can rely on when they check in. They're getting a clean room and they're going to have a safe stay. And certainly we found that, pardon me, those fundamentals have become so important, just the base of Maslow's hierarchy in the last year of the pandemic is just, providing those things are critically important to our guests.
And I'd just like to piggyback on that real quickly on the short-term rental piece, because a lot of people point to their success through the pandemic and, Airbnb going public and all that information out there. While it is very successful, it does go back to what I said earlier about right now, all we have really as far as travel goes is leisure. And that's really largely what the short-term rental caters towards. And so one other element to the short-term rental that, there are a few hurdles that side of hospitality is going to endure. And I think one thing is the housing prices right now will probably really limit their growth moving forward, at least in the short term. I think there's a lot of questions around regulation in certain communities. I know we see it in New England as to what is allowed and what owners may have to do for those units that they're putting out there. And, I know AHNLA has made a big effort to sort of even the playing field between short-term rentals and hotels. So I think there's a lot more as the recovery comes through. I think there will be, especially as corporate and group return. It's not like Airbnb and VRBO have put hotels in their dust by any means.
That's a great point. Sebastian, I'm going to stay with you for the next topic. We've seen that consulting and development teams are at the tip of the spear, right? You find out before everybody else just what the sentiment in the industry is. If the consulting teams are busy and if the development teams are busy, that's a great sign of positive sentiment in the markets. What are you seeing in terms of your pipeline and the kind of projects you're working on? Are you seeing more projects? Which markets are you looking at? I'll go to you, and then after that, I'll go to Julienne.
Sure. Yeah. So, I think it was, we slowed down towards the middle of last year, of course. But then towards the end of last year and going into this year, we were very busy with, new feasibility studies and market studies for new development. And it just happened to be a lot of those were in Florida, in Texas, and in some of those southern markets. We're now very busy with similar studies in the Northeast. I think financing for hotel development was pretty much non-existent last year. There's still a lack of debt, despite the equity sort of sitting on the sidelines for these projects or transactions. But I think a lot of developers, those that we talk a lot about consumer confidence. I think there's also owner and development confidence as well that goes into it. And we get calls all the time from people saying, if you're saying the recovery is 2 to 4 years, I'd love to start this process now, have a shovel in the ground, and be opening on the back end. And the thought on that also is that a lot of these markets right now, like for Boston, for example, or New York, are facing huge hurdles when it comes to supply. Boston has, in this year alone, will have a 6% increase to supply, which is the largest in 20 years. And so I think what ends up happening, and we've seen it in past recessions, this one's different, of course, in that we get these projects that were in the pipeline delivered during the downturn. And then there's this sort of lag of 2 to 3, maybe 1 to 2 years where there's almost no supply or even a reduction in supply. And so I think there are a lot of developers out there right now really trying to, it's a little bit more of a risk involved in that, but to get ahead of it and really move forward. And like I said, we have a handful of projects that we're working on in downtown Boston even. And as I say, their market with a RevPAR that's down 60% to 2019. But so I think that shows that there is confidence in a return to specifically corporate and group travel, which will in turn bring back some of these major markets.
Julienne, what do you see, just from a entire development perspective, maybe not specific to IHG, but kind of the larger scale?
Sure. Sebastian mentioned that there's been a number of developers who've taken advantage of the downturn, and I saw Davonne, nodding as well. And that's certainly been the case. If you've got, 20-25% occupancy and you've got cash to be able to put into your hotels, certainly take the time to renovate and take the time to continue moving your projects forward. But I think the added wrench in all of this is the cost of materials. And we all read, what was it, a month or so ago, that lumber increased by 300%. And that's been a real deterrent to continue developing. So that's going to continue to be a challenge. What we've done in the last year as an industry is really triage, right? And talking to, our owner partners on, what we can do from the brand standpoint in terms of, brand requirements, PIP requirements, property improvement requirements, and so forth, and alleviating some of the friction in an already troubled cash flow situation. Luckily, most of the lenders have agreed to forbearance and continue to agree to that. So that sort of time that lenders have provided owners and the PPP funding has really helped many hotel owners kind of stay above water. Where we've been busiest is really repositionings and renovations, conversions. There is capital out there. I think Stonehill Taylor, Stonehill Taylor's an architectural firm, Stonehill, the division of Peachtree in Atlanta, and then Access Point. They've both been very active on their lending arm for repositionings and renovations. So we've not stopped in that regard. And many of the companies have brands that are convertible, right? So we're seeing independent hotels that don't have a strong platform like Marcus has that, I might be better off branded because, nobody knows who I am. I don't, the consumer isn't sure what they're going to get when they stay with me. But if I'm associated with IHG or some of the other stronger brands, there's that sort of brand promise and ability to fill the rooms with brand contribution. We are starting to talk about new development again for hotels that'll probably open in 2024, 2025, in addition to keeping our existing pipeline moving forward. But for the last year, sort of new deals coming to our plate haven't really been there until about now. That has increased because the thought is in 6 to 9 months or whatever it takes, the lenders will be back for new construction because corporate business will be back. And that's really what the banks are waiting for, is the corporate business is the reason why so many of our hotels do well, right? You've got the points that the road warriors want to cash in Waikiki or whatever it might be. And the leisure traveler might not be motivated by that. And that might be why Airbnb is a competitor. But as a corporate traveler, I'm loyal to one airline, right? Because I want to get upgraded every time I fly. So that's the same, model in the hotel space. So when the corporate business comes back, the thought is the construction lending will come back. Hopefully at that point, materials will be more affordable. We'll figure out our port issues. We've had some issues getting FF&E into our hotels to the degree that a hotel in Georgia that was expecting its FF&E, it made more sense for them to port in California and truck the goods across the country, and that's crazy. But those are the types of things we've seen with the impact of the pandemic.
And Davonne, in the midst of all of this, again, I'm going to come back to you jumping in and buying a hotel last year. With the sentiment in the investment in the lending community around hotels, can you walk us through how you made that happen? What were the challenges you faced acquiring that hotel and financing it?
Yeah, well, we did a note sale. That's how we acquired that property. And as far as what I'm starting to see more and more now, more people are starting to get into the hotel space now, as far as hearing, Sebastian and Julienne talking about, new hotel owners and new developers. I'm gonna try to get into the space because they see it as a comeback, because they knew people were going to come back, and they're like, okay, wait, if we know that the industry is going to come back in this time frame, people, they were literally developing funds just to buy hotels, just to buy the distressed assets or to buy the notes. And so as far as we had to get creative when it came to financing and raising equity. And so we're starting to see more and more crowdfunding opportunities arising. As far as more people are creating funds, more people are creating, or they're using Regulation CF portals to raise capital, which will be good, because now for those who may not have been able to get 20% or 50% equity because they didn't have access to capital, now with all these different funds and access to capital when it comes to crowdfunding, they can become creative, either using a lender or financing the entire project with just through pure equity using crowdfunding.
And I think one of the things that you do is you work with new ownership groups and you work with the next generation of owners, which I think is great, because I think it creates tremendous generational opportunities to create wealth. Can you tell us a little bit more about who is this next generation of owner? What does he or she look like, and what's different about them?
Well, even just coming from Hunter, just the diversity with the new hotel owners, with their younger, a lot of folks are my age. I saw more people of color at Hunter. So definitely the hospitality industry is definitely starting to become more and more diverse. And through the pandemic, not only did I acquire a hotel with other business partners, but I also changed my business model, and I digitized, or I got online more and started teaching people, particularly people of color, and how to become hotel owners. And so I'm talking to folks who have multiple Airbnb units, like 50 to 100 Airbnb units. And basically I'm saying, you're owning a mini hotel. The light bulb is clicking. So now these are people who have access to capital. So connecting them to different brands like IHG, Hyatt, Marriott, Hilton, talking to an audience that they wouldn't even know it's there. And then also connecting to people who didn't even realize that they can own a hotel. So the new wave of owners is definitely going to be people who are going to be more creative, adding different revenue streams that we wouldn't even think to add. They have access to capital, people with all the crypto and crowdfunding and stocks and all these different things that are getting really creative when they're raising capital. So that's going to be a new wave of hotel owners. And also I'm seeing a lot of people, they want to do lifestyle brands. They want to do boutique hotels. Even they actually want to look into exterior corridors and buy those hotels and convert into something really cool that we wouldn't even think of, because we're just been so used to, being in the industry for so long. So the new wave of hotel owners, I think they're going to disrupt it, but disrupt it in a great way, because they're going to see it as an opportunity to add revenue stream and to diversify their portfolio, because they didn't know that they can either own a hotel, and then also in the Indian community, they've been in the hotel industry for so long, being born into it. Now they want to get more and more hotels. They want to get lifestyle hotels instead of getting economy and extended stay. So that's going to be the new wave of hotel owners.
Chad, I'm coming to you next. They say that relationships are tested during times of crisis, right? And if anything, the hotel industry is based on a very intricate set of relationships. Being on the asset management side, you've probably seen all of these relationships between the owner, the brand, the operator, the lender, all of this play out. What have you seen, and how do you think these relationships will change going forward?
Our approach has always been one that was grounded in collaboration. We always think that we can get more accomplished when we're understanding the ownership's goals and then helping them execute on those goals. But not in a way of mandating, more of a way of collaborating, right? So the relationship with the brand, the relationship with the lenders, all the different stakeholders, and we've been very successful with that model over the years. And in a time like this past year in a pandemic, I think that was extremely, fruitful for us, right? I mean, we were in the foxhole with our clients and doing what we had to do to make sure that we, can hang in there with them when they don't have the cash flow to take care of us. And it really was about, the long-term relationship and the collaboration. And, it's pretty amazing to look back at the last 12 months and how all the different stakeholders came together, the flexibility of the brands, right? So just threw a lot of the standards out the window and said, listen, here's what we've got to do to take care of our employees and the customers, our ownership groups, and they've been more flexible than they've ever been, which has been fantastic. So I think coming out of the pandemic and making sure that those relationships continue down the path of working together and being flexible is going to be important to the success of the whole industry. I mean, everyone's optimistic about the recovery, and it is fantastic, but we have a long ways to go. And so, I'm hoping that we've reset some of the relationships in the industry, and it's for the long term, and not just the short term. Same thing with lenders. I mean, the amount of capital that's in the marketplace looking for the distressed assets that never came to market, I think is a testament to the kind of sophistication of the lending market and what they've learned over the past couple of cycles and working with owners to get through this. I don't know if it's Andrea or Julienne, mentioned earlier, that flexibility, it's never been there before. Flexibility is they're getting tired, and they are, at some point you got to move these deals forward. But I think there's been a lot of lessons learned in relationships and just people's behavior through the pandemic. That's I think pretty positive to the industry as we kind of reset what it all looks like.
Andrea, what have you seen? Anything to add?
Oh, who are you asking?
Yes, Andrea. Yes.
Me? Okay. Sorry.
Yeah.
Me here. No, at first I think Chad summed it up beautifully. We same approach. I mean, Chad and our team work together, as a management company and asset manager, and there's always been this strong relationship and this collaborative approach. And what I think it did over the pandemic is it sped up. I mean, we were, conversing daily, in a lot of cases, because things were changing so frequently, and just navigating, whether it was regulations, navigating demand changes, getting creative and figuring out, how to create demand and new opportunities within hotels and in our portfolio. And so certainly establishing and building on the relationships that were already there. We were all in this together and needed to get through it in that way. So certainly that's key. On the lender side, absolutely agree with everything that Chad said, that, the lenders didn't want to take back the hotels. They knew they were, in the best situation if they could keep the hotels, with their borrowers, with the owners, and work through the situation. And as Chad pointed out, the distress that never happened. So because of the forbearance and the extend and pretend, there weren't the opportunities that came that we were hoping would come. But at this point, we're still in a situation in many markets, many properties where there's a cash situation. There's a cash flow. There's negative cash flow. They're still having to carry the properties, and there are deals that are basically, the loans that are going to come to term in Q3, Q4, that you can't extend and pretend any further. So there will be opportunities we'll start to see as we just kind of shift back into the investment, view of acquiring acquiring properties and looking at that. We should start to see something, it'll be interesting to see how that plays out. And whether or not lenders are going to grant additional extensions in exchange for pay downs or fees or whatever it may be. And if that, if it does trigger more hotels coming to market, for investment opportunity for all the dry powder that's out there, we'll see how that plays out. But certainly, the collaboration that we've seen in the industry through the pandemic has been good to see.
So when the pandemic started, there was a lot of, maybe not panic, but I think there was definitely a lot of concern. And I think there was this view that this had changed the industry forever, and that any new hotels that we were going to build would have completely different designs and would have completely different functional spaces. I mean, we were ready to redesign the future of hospitality. Have we stepped back from that, and are we going back to kind of a more rational view on it? Any of you want to take it?
Sure, I'll jump in. Pre-pandemic, probably for the last, couple decades maybe, we've been sort of hyper-focused on maximizing space, right? Cost of construction continues to go up, cost of land continues to go up, particularly in primary and strong secondary markets. So that efficiency of space has been on sort of brand radar for a long time, making sure that the breakfast areas are also, evening reception areas, and, breakout areas are also, functional throughout the day. And you don't ever have dead space, right? And trying to figure out how to use that space has been part of the criteria for a while. I think what's changed and what is changing, and we're not quite at a solution yet, is F&B offering. And, the beginning of the pandemic, the thought was the buffets are over. We're never going to see a buffet ever again. But I don't think that's necessarily true. In some of IHG's brands, for example, it's an expectation. And even in the height of the pandemic, in markets that weren't as greatly affected, smaller markets in the middle of the US, as an example, we had consumers coming in saying, where's the buffet? This is part of the brand promise. I don't understand. So shifting that is going to take some time, and making sure that we're satisfying what a guest expectation is for a certain brand, but also thinking about cost and labor associated to that expectation is going to take some time. So I think that's where the most innovation and shift could potentially occur, is what we do for F&B, particularly in the mornings. I think in the evenings, in brands that have them, people still want a bar with a bartender and have that experience. Like, you can't get that in Airbnb and some of the others, sitting down with a bartender who remembers you from last week or last month. I mean, there's a lot to be said to that human connection is important. And that's where technology can't replace, right? As Andrea mentioned earlier, we can check in and check out with our phones. Hey, I'm rushing in, I'm rushing out. I really don't feel like talking to anybody. But if I'm sitting at a bar, or I'm sitting poolside, or I'm waiting for a friend in the lobby, having somebody to interact with at that point is irreplaceable. We need that. So I think the innovation on the F&B side is still in the works. I don't think we figured that out yet, particularly in the sort of mid-scale and extended stay brand segment, where that sort of free breakfast, particularly buffet style, is an expectation. We continue to need to talk through that. During the pandemic, there's been a solve, like, Holiday Express, there's 3 different food options an owner can choose based on their occupancy. But as we were talking, last week together as a group, how do you satisfy a brand expectation if you have so many different models to choose from? So more innovation to come there. And that's where, Davonne, your young people and your friends, need to help us think through that, right? Because what we've always done in the past is not necessarily going to set us up for the future.
So I think we're out of time, but I had one last question from the audience, which is, do you see there being a greater demand for exterior amenity spaces, just outdoor spaces, because of the pandemic going forward?
I'll jump in since I'm off mute. And Davonne, did you want to add something? You go ahead.
Oh, I was just going to say,
okay.
I think so. I think it's going to be a greater demand. Plus people just want to see each other. People have been cooped in the house for a year. So I definitely think it's going to be a lot for people. I think as hotel owners or the industry, we need to get more creative on how we can use that space, how we can utilize that space, any exterior space that we can have, creating experiences. People will pay. People will pay for those upgraded experiences, so how we can upsell and create additional revenue streams from exterior amenity expenses.
Okay, so I'm going to quickly take 30 seconds. I have really short questions for 3 of you, or for all of you. 3 questions. 1, when you can start traveling, where will you travel? 2nd, if you had to buy a hotel, which market would you buy in? If you had to build a hotel, which market would you build in? Just 5 seconds each. Julienne, we'll start with you.
So where will I go? I've not really stopped traveling. I've traveled through the pandemic and I've traveled with my family as well. But we have a trip to Costa Rica on the books at the end of the year. As a family, we would typically travel internationally, and I'm excited about that. The second question is,
where would you buy a hotel and where would you build a hotel?
You know, I would buy in the urban city centers right now. I think there's an opportunity for a real regrowth story. Or a rebound story, and it's, you know, short-term pain, long-term gain. And I would probably build a hotel in a resort market.
Great. Davonne?
I have Cancun on the books. I would probably build a hotel in Texas or Florida. And what was the next one?
Buy.
Where would I buy?
Where would you buy?
Oh, I would buy a hotel in like a small boutique hotel in the tertiary market.
Okay. Chad?
So for destination, I've got a big wedding anniversary this year. So we have been traveling. So Guana Island, which is a really cool little private island in the Caribbean. Can't wait to get back there. I'm still bullish on the Austin and Denver type markets. And, you know, we do the majority of our work in the full service space. So I'm not really interested in building a hotel.
Got it. Andrea?
Oh, you're on mute.
First time. Goodness. Okay. So first, when the pandemic happened, we had a trip planned to Milan. We were going to go to Italy, and you know, I remember just saying, okay, that seems to be where the hotspot is. Maybe we don't want to go. And 2 days later, it was canceled. So let's just put Italy back on the trip. That we want to make that trip. When it comes to buying a hotel, you know, we really think that the opportunity is going to be away from the coast. It's going to be, you know, we are based in the Midwest. We operate in the Midwest as well as, you know, across the country. But we really think kind of that Salt Lake City to Pittsburgh and Minneapolis to Houston, that's where, you know, away from the major markets is going to be a key opportunity. And we have a lot of expertise in those markets. So, and we're not as focused on new development. So I'll leave that one. But
Sebastian?
Well, my first trip is, I guess the question would be, am I bringing my kids or is it just my wife and I? But my wife and I are headed up to Acadia for a half marathon in a couple of weeks. So that's our big trip. We'll paint.
Does not sound very relaxing.
No.
Yeah.
Little pain and some fun as well. But as far as building and buying, you know, I think if the opportunity presents itself, I'd love to buy a limited service hotel in an urban market in the Northeast. And then building the potential to do this is slim to none, but in a coastal Maine or a Cape Cod, where the existing inventory is very old and very traditional.
Great. Thank you. So we're completely out of time. Thank you so much to all of you being part of this panel. I appreciate it very much. I'm going to hand back over to Dean Upneja for the closing remarks. Thank you, Dean Upneja.
Thank you, Kaushik. That was just such a wonderful panel. Truly, truly appreciate everyone who participated. Andrea, Chad, Sebastian, Julienne, and Davonne. Really learned a lot. And I'm very excited that everyone, you know, has not just stopped traveling and they've got definite plans to travel. So that's very exciting. I also want to thank everyone who's attended and spent an hour on this Friday joining us for this panel. Thank you so much. And I also want to briefly mention that we've got 3 other wonderful panels through the rest of the summer. The next one is on June 15th, Hospitality, Wellness, and Community, the Future of Senior Living, will be moderated by Dr. Makarand Modi on our faculty. The next one is June 29th, What New Restaurant Concepts Are Emerging and Why? Keloa Pomerantz is a graduate of Shaw and is now a consultant with Real Food Consulting and operations manager with them. And the last panel we have for this summer is Thursday, July 15th, Why Must Innovation and Entrepreneurship Shape the Future of Hospitality? I will be moderating that panel. So I hope that everyone enjoyed. Please have a wonderful and a safe rest of the summer. Hope to see you back for the other panels. Thank you.
Thank you. Take care, everyone.